Hello and welcome again to Stocks Advisor channel. In today's episode we will talk about XOM Mobil Corporation, traded at New York Stock Exchange, ticker name XOM. Well, XOM Mobil is showing a nice recovery sequence from beginning of November. You can see all the way the price is going up, also followed by moving averages. And speaking of moving averages, here at our daily charts we always have three moving averages depicted. These are moving averages 20, 50 and 200. Being green, blue and red line correspondingly. Here on the left you see their legend. So if you look at those, you see that we are in now in the bullish mode overall in so-called 20, 50, 200 pattern. What does it mean? It means that starting from beginning of the year, all three moving averages are aligned like this. So moving average 20 on top, 50 in the middle and 200 is on the bottom. And until this is the case, usually for those who are trader, you can just sit in the position, and while it is the case you can always enjoy it and make a profit. So it means that within a reasonable amount of time it will anyway give you a profit. So overall this is a nice, if you are more let's say short-term trader or daily trader, you of course want to catch the wave. And speaking of catching the wave, that's what we will do here today. So in general, until we have a major correction, and major correction indication will happen only when we will pierce moving average 50. So this is the condition for major correction to begin. If we cross moving average 50, I will write it here like this. So whenever we cross it, so if you see the first time it's crossed, this is actually the condition for a major correction to come soon. It's not that it immediately happens. There still could be one rebound, but it's an indication. Until this is the case, you can just enter at any normal correction or the wave correction. The wave correction, actually ending the wave, it's not really a correction. It's just when we touch moving average 20 or we pierce it. Here you can see those examples like in January. Also similar situation was a little bit not completely finished by end of February, and now we are about to do this again. So in general, also being slightly overbought in RSI wise, it would mean that we might still a little bit slide down. So here would be the very nice level to enter, expecting this wave restart, let's say, between the current price, so it's a little bit low between 56 and between 60. So this will be our level to enter. Generally speaking, it's an immediate buy already, because if this behavior continues, we might have a very nice next wave for XOM Mobil. Really good, really strong now, because recovering after all these let's say COVID related declines. And of course now when we have more vaccination ongoing, more stuff are going to open, of course XOM Mobil is also going to grow. On this part, it won't be a major driver, but it will be also a strong driver for a price to recover. So overall this is the first entry opportunity, and then when the price goes up, it's up to you. If you want to become a mid-term or longer term trader, you could follow this 20, 50, 200 rule. Until this will be the case, you can sit in the position. If you're more short or daily trader kind of strategy person, you can just take up to 10 to 15% profit and then exit, re-enter if needed, or check other videos, other stocks, other opportunities there as well. You can find plenty of them at our channel. So this would be the entry, quite easy play. What if we go for major correction already? Because you could also notice that moving average 20 is bending a little bit, so it might of course go waving upwards as we saw previously. But if it goes for a major correction, we need to be prepared. Well, then it's again no risk here, in the sense that we just following this SMA 50 crossed rules, meaning the correction start, we just prepare to enter and at the level of moving average 50, a little bit higher, because it will also slide, and this will form that channel to enter. Let's call it S3, S4. Again, this is not that we expect, the major expectation here is the price to grow further, but if a stronger correction takes place, or will be first indication of the trend to be stopping, then price might decline all the way to 50, 53, and this would be the place where we can wait for it to enter again and average down in order to exit with the target profit being 10 to 15%. So this is more about, let's say, rebounds on the further growth and rebounds on the correction. If there is negative catalyst, of course, this is also possible. We don't need to forget this. But it's really hard to imagine what could be a negative catalyst at the moment. But we always need to take it into account because these might be happening. And if happening, you should be prepared for really a severe action and severe average down. If this is going to happen indeed, this would be the level for a major average down or the channel, because this is also the area that was formed previously and traded strongly there, and also it will be just below moving average 200, so it will make it actually a double support level, and this will be between 39 to 42. And again, this is not at all that the price will go there or it's expected to go. This is more a mitigation. So what to do if it goes there, because if it goes there, we need to be really well prepared, because we don't want to be, let's say, caught on surprise with negative news. And that would be the average down here, strategy 39.42 therefore. Overall, of course, it's very bullish stock. So we buy here with the strategy of 1, 2, 2. So classical bullish strategy, meaning that you enter here with 1, 2, 2 if needed. So the funds that you would like to play here, you can split in 5 portions, and then you can buy with 1 portion in the first entry channel. You can average down with the 2 portions in the second entry channel if you go there, and if any negative catalyst will kick in, you can average down the 2 portions in the last channel. When people will be taking loss, you will just enter again and prepare yourself for taking profit with the target to 10 to 15%. So that's quite simple play here for Exxon Mobil. Overall, not much to say, growing well, stably, maybe some small wave corrections, but in general, it's a good stock to be in for both for short terms and also for mid-long term traders. And this is the numerical representation. If you are more for graphical one, you could look here on the right side, just make a screenshot of this one to play with. Of other parameters interesting here, it's MACD, slightly going down, developing negative wave. Once it will bottom, we will have a more major correction, more major spike upwards, like we saw by February or by end of the year, which would mean just again confirm that the current wave is finishing, so it might either re-establish itself just below moving average 20 or go a little bit deeper. We will see. Volumes are traded still the same, which is nice. So market is just trading a little bit higher than previously, which also indicates we are in recovery mode, so people are more interested in it. So you see elevation of the volumes traded. But in general, it's still stable volume. So if you look here, the volumes, it's quite nice. RSI just below might little bit slide down to the middle and then recover again, showing next wave to form. So everything speaks of continuous growth with some slight possibility for small corrective moves. So very good stock to be in. We will also watch it for later. It's in the recovery mode, so good luck with it. Also, please don't forget to subscribe to our channel for your first time watching this video. Also, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.